Hello everyone, welcome to Elliottwave.com YouTube channel. Today is November the 7th and we're going to be taking a look at the chart of the Nasdaq. Here is a 60 minutes time frame, and we're going to take a look and explain what we expect here in terms of the structure and the movement. And we can see from the chart here that we rally, and the pattern, the structure of the rally definitely is an impulse, right? It has all the characteristic and behavior as well as structure of an impulse to the upside. So I guess naturally the question is going to be whether we finish the correction, whether this rally here is going to be the start of a new bullish leg that will take us to new high, or whether this is only a corrective rally. So that's what we're going to be looking at. Now, first of all, I think there is no denying that this rally here is an impulse, right? And therefore, by definition, if it is an impulse, then we should be getting at least extension higher, right? Because it is still within the impulsive move here, and within the impulse, we might still see another leg higher before we finish the entire 5 waves, right? So because we are doing a 5 waves, so the only two options we got is whether the 5 waves rally here is going to be ending with 1, right? Whether this is going to be ending with 1 when it finishes. Now, if you're saying it is a with 1, then obviously then this rally here is a start of something new to the bulls, all right, to the upside. So it's a start of a new bullish cycle. But the other option is whether when we finish the with 1, when we finish the 5 waves, instead of ending with 1 of a larger degree, we finish with A. Now, if you say it is with A of a zigzag, then that means you are saying that this rally here actually is a corrective rally. So in order to answer that, we're gonna take a look at the larger time frame and explain to you what we think is the more likely scenario. Okay, so for now we basically are kind of in agreement that this rally is an impulse, and therefore most likely you will get an extension higher regardless because of the 5 waves, right? Remember, if it is a 5 waves, right, whether this is ending 1 or A, it doesn't matter, right? As you notice, even if I label it as A or 1, what that means is that because of the 5 waves, this pullback is not going to be making new low. It's going to make a new high again, and this pullback can either be or 2, right? So I think that's something that we can kind of say whether or not this is a new bullish leg or whether this is just an ABC. Because of the 5 waves, most likely we're going to get another leg up again as long as we stay above 14,140. So that's something that we can say for to basically mention it to you guys. All right, so secondly, let's take a look at the larger time frame to figure out whether this is a new bullish leg. Now, if I look at the daily time frame, right, now by looking at the 1 hour, you can see here we are labeling this W. Now, by looking at this label here, you know what our bias is. So what that means is, if you go to the daily, this is a W. So our bias is that we are not done to the downside, right? Because it's a W, right? Now, let's kind of observe in the daily time frame here. Take a look at this decline here from July 17. Now, this is clearly corrective, guys, right? This is not an impulse here. In fact, if you measure the extension, let's say if I'm using this one as the connector, right, it bounces perfectly from the 100%. An impulse will not have a reaction from the 100%. Impulse is always going to be like this: 1, 2, 3, extended 3, 1.618 extension, 4, 5. That is an impulse. This is not an impulse. So as a result, based on this alone, you know that the market is still bullish, because if it is bearish, it wouldn't make this type of structure. It will be doing something like this: 1, 2, 3 at 1.618 or even more, 4, 5. If it is already starting to turn bearish, this is what the structure should look like. And the fact this is only, you know, like no extension on the third leg, bouncing from the 100%. This is telling you this is a bullish market. So as a result, now that we have a rally higher like this, so technically there's a risk that we might actually extend on the upside, because after all, this is a corrective structure anyway. So we know that in the larger time frame, it still remains bullish market. So if you see an impulse in the shorter degree here, so there's a possibility that actually this is a start of a new bullish leg, and this is the end of the correction, and then this can actually go to new high. Now we are calling it W, and what that means then is the 5 waves here is going to be ending A, B, C. It might retest this peak before lower again, and that will be your X. Now is this which one is more likely than the others? If you look only in the Nasdaq, the answer is, I think both are possible. It could be W here and then turn lower again, or it could be in the end of the correction and then we make a new high. Now, will I be willing to kind of try to sell the Nasdaq? Probably not, because it's clear that this is only corrective structure, so I would be kind of hesitate to try to sell something that I know has a bullish bias in the larger time frame. Okay, right. So basically, again, because of this larger degree structure here, it is kind of risky to think that we're gonna turn lower again, especially when the shorter cycle here in the Nasdaq is actually impulsive. Now the reason that we might possibly have another leg lower actually has nothing to do with the Nasdaq. It has something to do with other indices, which is also another US indices, the Russell, right? If you look at the Russell here, now Russell without any question is the weakest indices right now, right? The weakest index in the US. Now you can see in the Russell, I look at the weekly time frame, you can see this one, actually this last low in the Russell, it broke all the previous low. So what this is telling us is that the Russell is creating a lower low sequence, right? So this is, let's say if this is your first swing, this is your second swing here, then you have a new low here. And so technically, when you have a lower low sequence like this, the implication is that most likely, not always, but most likely it's going to extend to at least 100%, so which is a long way to go. So that means the Russell, technically, unless there is some complex correction, the rally in the Russell and also the rally in the Nasdaq and everyone else should fail below here, the last peak, which is this July 31st, right? So again, going back to the Nasdaq again, July 31st, right? If I go down to the daily time frame, so this peak here is July 18 here, July 19 in the Nasdaq. So assuming there is kind of a little bit of a correlation going on between the two, then we can also cannot rule out the idea that the Nasdaq might potentially fail below this July 19 and then turns lower again as the Russell also continues to go down. And that's why we're still calling this as a W. So we are labeling things not just because we only look at one specific instrument, but we consider the all the other correlated instrument as well, right? So that's what we are looking at right now. So at least in the shorter cycle, what we can say is that because of the 5 waves move, most likely you're gonna get extension higher still. Whether this 5 waves is ending with 1 or with A, you're gonna see another leg higher most likely as long as we stay above 14,140 here. All right, so that's the idea here. As always, if you want to get more ideas and more updates, Elliott Wave, you can try our service. We have 14 days trial. The link is in the description of the YouTube video. See you all again next time and have a nice day, everyone.